evening. Ira Epstein of Linn and Associates with your ETF Spider wrap-up, and this is for Wednesday, the 8th of April, 2020, about 6:05 p.m., and that is Central Time. A big up day. So the markets that lost the ground yesterday at the end of the close came back and made them up going into the end of the day. This doesn't change anything about the resistance points in the market, and we're right there in many of these indices. What happened today, in part, the market got a boost as Bernie Sanders dropped out of the presidential race. That means we're going to have Joe Biden and one of the women that he picks as a vice presidential candidate. We also know now that it's him and President Trump. That's an era of certainty. Markets like that. They don't like to worry about, is a socialist program on it. They want to know who's running and things of that nature. We're also seeing the death tolls go up, but the statistics behind those, the amount of people hitting new hospitals, both in Europe and the US, the amount of people testing now, well, it looks like the curve is such that we're not going to get, and I think I've said this a bunch of times, in between that 100,000 and 240,000 deaths, as long as social distancing stays where it's at. Now, if people get together too soon, you can start this whole process over, but we'll see what goes on. So let's go to the charts rather than, I'm no doctor, I'm just telling you what I'm reading and what's going on here. If we take a look at the marketplace, you've had a nice rally. Now you're going to read in the morning that a lot of technicians are going to say, that S&P, it's come back 20% off the low. That's the beginning of a bull market. Correct. I wouldn't argue that. That is the definition of what it does. We'll see if it can follow through in times like this or not. But you can see how these markets have been coming up in layers and then moving the higher prices. With that, we still don't have a good pattern here. We have a pattern of a lower low and a higher high. Bull market patterns are typically higher lows, higher highs. You don't have that right now. What the market did rally to in this market is first it hung at the 18-day moving average of closes. That's this red line that extends all this way. It then went to the 200-day, and that's the battleground this market is fighting at. It's also right at the upper Bollinger Band. Now, what's the importance of that? See this black dashed line here and here? Markets will trade within the black lines 95% of the time, 5% of the time out of them, and they don't stay out of them very long. The pattern we have right now is not like this pattern. The pattern is one that spiked up from the 18-day average into these two resistance points. It's where I'd expect to see a problem. If the market rallies again, well, then the 100-day average becomes it, and after that, there are no moving averages. So I do think we have an area here of resistance. You're overbought. You're going into a long weekend. How do you play that? That becomes your problem. In the SMH, which is the U.S. Semiconductor 25 Index, the market's right into the 200-day average in the upper Bollinger Band. You did not make any ground from yesterday, so to speak. You had hit yesterday, and I'll take you there. You had hit that number, fell by the end of the day, and today you regained where the market was then. I don't know if it's going to be able to continue here as the market's in overbought condition and at a resistance point. In the industrial sector, we're still pointing up in the momentum, but in overbought territory. The trend is up. You've had higher lows, higher highs. I look for the pros to take money off the table at 63.85 on this, and I don't see them stepping in the buy until the market works out of the overbought condition. In the energy sector, you know what's going to happen tomorrow. We've got the OPEC meeting. So it's OPEC plus. Do they reach a deal? What is the deal contingent on? Is the U.S. joining in any way? I don't have the slightest idea. What I can tell you is this is a market that's had a nice run. Is it to buy the rumor, sell the fact? You got to be careful of that tomorrow as well. You're at a resistance point. QQQ. Yesterday, we got right here. We hit the 100-day average, the upper Bollinger Band, and by day's end, the market had fallen from its high, basically $6. Today it made back $4 of that high, and it's right back into that resistance zone, and again, you're very overbought. So are you going to get rewarded if you go away with long positions over the weekend in an overbought condition into the COVID-19 news? I don't know. I'll leave that up to you. There's no protecting yourself on Friday from the news. The next time you'll trade in these markets is going to be Monday morning. Remember that. Close for Good Friday. As you take a look here, you don't have a trend in the emerging. You had a lower low and you broke away from that into an overbought condition. If you rally more, I'd look for the upper Bollinger Band to be where the pros come out of the market, but I'm not seeing a trend right here. In GLD, what you don't want to see is the market take out 154.38. If that takes place, you could end up with lower highs, lower lows, which calls for a move back potentially to the 149 level. Now I'm watching this right here, the slow stochastics. Both numbers today were over 80. They were over 80 yesterday. Another day of that is a very strong performance. That means that you've converted the market from being overbought to embedding. And we haven't done that in gold in a very long time. Now, when you last did it was back here, and you can see the market took off to the upside. So I'm watching this. If this market can start moving higher and get through let's call it Tuesday's highs without taking out 154.38. That would be an interesting play. That would turn this market and keep the trend intact. In the gold miners, overbought, coming into an area of resistance, the 100-day average right up through here. This market too has been in an uptrend, so good action there. And I'm getting what I smelled was wrong in TLT. This whole rally, I kept pointing out to you, all you're doing is charging back into these highs you made right here. Now the market came down today, made yesterday a lower low, an inside day today. Now if you take out yesterday's low, market starts favoring getting back to the 162 area. Take a look at the settlement today. Under 80 on the slow stochastic. So you lost the embedded reading on the close. That often means price and the 18-day average make a run at each other. To stop that, market has to jump up instantly tomorrow and not have another day of embedding. I don't know if it can do that. In FXE, can this market get up and over 103.33? If it did, you would resolve this pattern of lower highs and higher lows. It would switch around to higher lows, higher highs into a bullish pattern that could mean that the market might want to make a run at the 100-day average and the 200-day average of closes. Interesting, but I'd be very surprised if the pros don't start to have stop orders over that market to see what it's made out of. Want to remind you, we put out a lot of research at Linn. You might want to see what we do in a lot of the other markets, the financial writings that we do, and so on. If you go to www.iraepstein.com, you'll see our website, our free offerings. And if you go under research, you'll be able to see all the different products I put out. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.